Well, a very volatile session for Australian dollar futures, a 54-tick range, spending most of the day in the red, climbed about midday of the session, closing in the black. This is 3 days in a row of positive territory for the currency future that consensus continues to think is the laggard and has been the laggard for a very long time. Futures opened up the session at 71.72, saw a high tick of 71.99, low tick of 71.45. The fact of the matter is, it was around the unchanged line most of the day, to the negative side. About 12 noon Chicago time, it started to rally. A lot of people scratching their head on why. It appears to be there was a pretty good lift in both copper futures and iron ore prices. Definitely would help the Australian US dollar cross. Beyond that, trade optimism is day to day. Australia very tied to the China trade tariffs. And as of yesterday's close, Australian dollar took a nosedive on some more dour feeling on what's going to happen with this trade tariff. But that reinvigorated itself this afternoon along with metal prices. Also to note with iron ore, how it affects the Australian dollar is that there is some supply disruption in Brazil, and it looks like that China will have to import more from Australia than first noted. Australian dollar continues to be, other than today, in more of a narrow range, a range-bound market, still like licking its wounds after the RBA minutes and looking forward to more of those, and going forward also on the China trade tariff extension, what that will do. Lastly, one small headwind to Australian dollar futures overnight was that news came out that China was going to limit, if not eliminate, coal imports coming from Australia.